Hi everyone. This video lecture consists of risk involved in online trading and how to mitigate the same. Let's have a discussion on the challenges we have to face or the risk we have to expect while trading online. The first concern is all about security. As when performing any financial transaction online, trading stocks online can pose security risk. Despite the security precautions taken by online trading sites, there is no guarantee that a hacker won't find his way into your account and steal your vital and sensitive financial information. If your online trading account is large, you are at risk to lose a serious amount of money. Make sure that you choose a unique account password and change it frequently. That is the only thing we can do to some extent to avoid the problem of security concern. The next one is technical difficulty. Technical difficulties with a site can delay a transaction, resulting in unintended and undesired consequences. You may have purchased a stock at one price, but a system failure may have negated the transaction. By the time things are up and running again, the stock price may have increased. As a result, you could end up paying more for the stock than you actually intended. When seeking an online broker, check into what safeguards it offers to protect you if this type of incident occurs. After hours blues is the next risk. Online trading often occurs after the stock market has closed for the day. Traders perform transactions by using electronic communication networks, ECNS, on which buyers and sellers are matched through computer systems. Possible drawbacks to trading after hours can include increased price volatility, reduced ability to act upon current course, and more competition with professional traders. Liquidity can also be an issue, as you may not be able to convert your stocks to cash quickly if the need arises. Next is the element of too much chatter. Online trading fosters the creation of online chat rooms and forums where people can meet and share information. Unfortunately, these meeting places can be a breeding ground for rumor, misinformation, and even the spreading of false stock tips. It is important to research any information you pick up from chat rooms or discussion forums before taking action based on a recommendation from a chatty Cathy. It may even be wise to ignore what you read in these sports completely. Risk management or mitigation of risk and stock market. Mitigation simply means to take precautionary measures from all those risk elements we have to face. There are certain strategies that can be employed to mitigate the risk in a stock market. Following are some of the strategies. The first one is we have to follow the trend of the market. This is one of the proven methods to minimize risk in a stock market. The problem is that it is difficult to spot trends in the market and trends change very fast. A market trend may last a single day, a month, or a year, and again short-term trends operate within long-term trends. Portfolio diversification. Another useful risk management strategy in the stock market is to diversify your risk by investing in a portfolio. In a portfolio, you diversify your investment to several companies or sectors or asset classes. There is a probability that while the market value of a certain investment avenue decreases, that of the other may have increases. Mutual funds are yet another means to diversify this impact. Stop loss or trailing tool is yet another device to check that you don't lose money if the stock goes for a fall. In this strategy, the investor has the option of making an exit if a certain stock falls below a certain specified limit. Self-discipline is yet another option employed by some of the investors to sell when the stock falls below a certain level or when there is a steep fall. I would like to quote one of the most important investment quote by Niall Fuller. It's critical for the crocodile to understand its prey and to know where to look for it and remain calm and patient until it arrives. As traders, we have to know what our trading edge looks like and where to look for it, and then control ourselves enough to not overtrade before it arrives. That simply means we have to take enough time to watch the trading pattern of the stock market and act accordingly only when the right time arrives. Learn wise and trade wise. Thank you for listening.